Morning, everyone. My name is Jessica Porras, and I'm the Senior Manager for Education and Outreach at CAQH Core. It's my pleasure to welcome you today to our CAQH Core webinar titled Matching Payments to Services Delivered, What Every Provider and Health Plan Should Expect, and What Every Trading Partner Should Deliver. Before we begin, I'd like to mention a few logistical items. You can download a copy of today's presentation from the caqh.org website. To do so, navigate to the Core pull-down menu at the top of the caqh.org welcome screen and select the Core Education Events page. A link to the PDF version of the presentation can be found under the listing for today's webinar. And just so you know, the slides are there now, and they're also available from GoToMeeting as a handout if you'd like to download them. On this slide, you can see a screenshot of the attendee GoToWebinar dashboard. You should see something that looks similar to this on the right side of your computer desktop. When joining today's session, it's possible you may have joined the audio portion of the webinar using your computer speakers by default. If possible, we'd prefer for you to join the webinar audio by telephone. To do this, please select the telephone audio button in the audio panel of your dashboard, and the dial-in information will be displayed. Please make sure you enter your audio PIN, which is found under your dial-in information. We will save time at the end of today's program dedicated to responding to audience questions. You're encouraged to submit your questions at any time during the webinar by typing them into the questions panel of your dashboard. We do ask that when you submit your question, you identify the type of organization you're with so we can give you a more accurate response. Today, we'd like to thank our guest speakers for being with us. Pat Weetuck, who's a Senior Health Reimbursement Specialist, is here representing ASC X12, which develops and maintains EDI and CICA standards and XML schemas, and Priscilla Holland, who's the Senior Director of Healthcare Payments at NACHA, the Electronic Payments Association, which manages the development, administration, and governance of the ACH network, which is the backbone for the electronic movement of money and data in the United States. So today we'll start off with a presentation from our CAQH Core staff on the value of having interconnected payment and remittance transactions. That will be followed by a presentation from ASC X12 on the benefit of having a compliant 835 transaction, and she'll go over some of the recurring challenges and potential solutions. Our next speaker from NACHA will talk about the NACHA CCD Plus specifications and the value of having an electronic healthcare EFT standard, and she will also go over some of the recurring challenges and potential solutions. And finally, we'll have another presentation from CAQH Core staff about the CAQH Core Reassociation Rule, and again, we will go over some of the recurring challenges and potential solutions. So as you can tell from what I've just said, we're hoping to cover some of the tough challenges and hopefully leave you with some good tips and resources. But before we begin, CAQH Core Senior Associate Drew Voital will walk us through our first polling question. Drew?
Thank you, Jessica. So this brings us to our first polling question of the day. I will read the poll, and then I will launch the question for all of you to log your response. And then after everyone has, after we pause for a while, we will share the results. So the first question of the day is, please indicate the extent to which your organization sends or receives healthcare payments through EFT. And this is the ACH network only. So I will launch the poll, and you should see it on your screen. And please take a moment to log your response. We'll wait about 10 more seconds. About 3 more seconds. All right, I will close the poll and share the results. And as you can see, the largest portions, 28%, both were above 75% of the time, and also we neither send nor receive healthcare payments through EFT. I will now hide the poll, and we will carry on with the rest of the webinar.
Thank you, Drew. So let's begin today's program with a presentation on the value of having interconnected payment and remittance transactions by CAQH Core Senior Manager Robert Bowman. Bob?
Great. Thank you, Jessica. Thank you, Drew. And if we can move on to the next slide, really what we want to talk about today is the value of combining the EFT and the ERA together so that the provider has all the information that they need to accurately post the payment and the remittance device information to their AR to help reduce the burden that the providers have in that process. And we know, even from the Federal Register, that there are significant burdens on the provider in using these two transactions. If over 90% of the claims that a provider sends and that a health plan receives are sent electronically using the 837 transaction, as we saw from our first polling question, we're nowhere near that when it comes to actually receiving your EFT payment. So we all bill electronically our claims at over 90% generally, but we receive far, far less of our EFT payments. We receive far fewer payments electronically. We still love our paper checks. So part of the process that we want to make sure that we can talk about today is removing those barriers and some of the options around that, as well as the technical components of the transactions, both the X12 transaction of the 835 and the CCD Plus, to make sure that providers can transition away from the paper processes and the manual processes that they have today to a completely electronic process. So moving on to the next slide, to get the idea of exactly what the operating rules do. The operating rules, they build or pair the data content of the standard transaction with infrastructure rules so that the data from the plan or the financial institution of the plan can be sent to the provider through whatever means necessary, really. So the provider can have any sort of, any bank that they wish, can use any sort of clearinghouse that they wish, any software vendor that they wish, as well as the health plan. So the operating rules help establish a network for the flow of the data from point A to point B. So as you can see, we do build the operating rules directly off of very specific standards. Those standards include for the EFT, the NACHA CCD Plus addenda, which must contain the TRN reassociation trace number from the 835, as well as the 835, the version 5010-835. So those two HIPAA standard transactions, plus the operating rules, which include provider enrollment for EFT and ERA, infrastructure for the ERA, uniform use of the codes that convey adjustments and denials in the 835, as well as a very important role, as well as the reassociation rule for the EFT and ERA. So combining the standards along with the operating rules will have administrative simplification. We can help reduce the cost of the administration of this component of the revenue cycle between health plans and providers. If we can go on to the next slide. Just as a ensure that we're all kind of level set with how the transactions flow and really the requirements that are established in the operating rules. The ERA, the 835, and the EFT, the CCD Plus, the addenda record, they come to the provider usually through different means. The health plan can deliver the 835 to the provider, or the provider can pick that up from the health plan, or through clearinghouses or a number of intermediaries in between. Or in the in the EFT, the CCD Plus, generally comes from the health plan's bank to the provider's bank. And the provider may have intermediaries here as well. There may be a billing service that the providers outsource their AR to. So there's lots of components around the flow of the transactions from the health plan to the provider that should be considered as you address the concerns of migrating from relying on paper checks to an EFT check, an EFT payment, excuse me, and the 835 transaction. We can move on to the next slide. We'll move into our next polling question. So I'll hand the call over to Drew to administer the next polling question for us.
Great. Thank you very much, Bob. And so this brings us to our second polling question. I will, like last time, read the question and then launch the poll. And this one says, has your use of EFT for healthcare payments saved your organization time and or money? I will launch that poll, and we will pause briefly for you all to answer. We'll wait about 10 more seconds. All right, about 2 more seconds. All right, I will close the poll and share the results. So the largest percentage of you, 32%, did not know, were unsure. And so we're hoping that this education session is helpful for you, hoping to help understand that. And of course, at the end of the webinar, we'll provide our contact information for you to reach out to us in case you have any questions on this and need any further explanation. So I will hide that, and we will carry on with the webinar. And we will continue with today's program with a presentation from Pat Wietak, who is here representing ASC X12. Pat is currently a senior healthcare reimbursement specialist at WPC Healthcare and is an industry leader in healthcare electronic transaction standards and regulations. And she has an extensive background in clinical and financial systems for both providers and health plans. Pat has provided healthcare solutions and services for over 25 years. We are very happy to have Pat here as a presenter. Pat, go ahead.
Oh, thank you very much. I'd also like to just mention before we get started that I have a couple different hats, and as we go through the presentation, they may come through. First, I've been co-chair within the X12 organization of Workgroup 3, which develops and maintains the 835 claim payment advice. I've been doing that since about 2001, and I'll just note that I was probably about 5 years old when I started. I'm also a voting member of the Codes Committee, which is the group that maintains the claim adjustment reason codes. So that will come up in my presentation. And then I also participate in the CAQH Core Code Combination Task Group. So I just wanted to mention that as I'm talking through some of this, those roles might sort of take over a little bit as we talk about some topics. Next slide, please. I just also would like to just mention that even though there are topics around compliance, I want to make sure you all understand that at no point is this really legal advice. It is information that, to the best of our knowledge, comes from different resources, Federal Register, HIPAA guidelines, things like that. Next slide. ASC X12, for those of you not familiar with the organization, we've been chartered by the American National Standards Institute for over 30 years. We've been developing and maintaining the EDI and CISA standards. XML schemas, also kind of newer on the horizon, is part of our purview, and they drive business process globally. X12 membership is made up of many different organizations, payers, providers, clearinghouses, many entities, finance, government, supply. It goes beyond just what we know as the insurance, healthcare insurance side. And there's the X12 website if anyone's interested in learning a little bit more information. Next slide, please. So today, what I wanted to talk a little bit about was compliance within X12, the 5010 version, which is the current HIPAA adopted version of the 835 transaction, focusing on reassociation. That is really the critical feature today in sort of within the marketplace. Getting your 835, getting your payments are really critical. Making sure you get them together, that you can track them and find them. But there are problems with that, and so what I'd like to do is kind of touch on some of what those problems are. And talk a little bit about maybe some options. So the 835 is your claim payment detail transaction. Some of you may be very familiar with the actual transaction itself. Many may have never seen the string of characters that, the file and what makes up an 835. It's a very technical transaction. It contains a large amount of information, though. A payment can be for an NPI, for a tax ID. It could be a subpart of any of those entities. Trying to manage through that is also a bit of a problem, so it's important that the 835 contains all of that information. It contains the banking information. If it's a check, it will have a check number. If it's an EFT, it has to have the banking information for both the sender and the receiver. the date that the payment is available. If it's an EFT, this is the date that the money will be available in the receivers, the payee. It will be in their bank account. That's very critical that that date be exact. So again, anyone could go in, if you're tracking your 835, if you're tracking your money in your account, you'll know what date to expect the money to be available. So as it's been mentioned, and as we've talked about in the past, the mandated version of EFT is CCD+. You'll hear a lot more about the details around CCD+ in the next presentation. What links the 835 to the CCD+ are two key segments in the 835. And the BPR segment, and that's where you'll see the payment information, the check amount, and then the other transaction is a TRN. Again, if you were to look at it, it's just a string of characters, but it contains multiple pieces of information. Next slide, please. So this is reflecting what that information looks like. The CCD+ record is on the left-hand side. It's a record 6, record 5, and 7. On the right-hand side are the associated data elements from the 835. So you can see that there's an identification, the TIN, the tax ID number, coming out of a segment, an REF in the 835 that lines up with the record 6. The actual EFT date is in a segment called BPR element 16. That lines up in the CCD+ in a record 5, field 9. The other key, and probably, I mean, this is of what makes up the guts of the CCD+, is the TRN segment. It is replicated exactly between the 835 and the CCD+ transaction, 100% replicated. It contains a type code, the actual EFT trace number, and a payer identification. There is also a fourth element that could be an extra identification if needed. So it might be a payer and a subline of business, like for example, the payment could be coming from, say, a CHIPS program or some other internal designation. So that's really the key. Having all of this information is what makes reassociation work. Without it, you're really stuck with a EOB, an 835. If your vendors give you a printout of some kind of that information coming off the 835, and then being able to go to the banking side and try to match it, that this is the guts of what makes it all work today. Next slide, please. So that should sound pretty easy to accomplish. Payer creates the 835, they create the information for the trace number, and voila, it should work because it goes off in the CCD+, the provider gets all that information, and everything's great. But the reality is that 100% of the industry is not doing the 835 and EFT. They don't have it turned on. They can't get an 835. They can't get an EFT. You know, many different reasons and things that are going on in our industry right now to stop that from happening. And why is that? So what I wanted to do is talk a little bit about those reasons why, the obstacles that could be happening to making this perfect world of EFTs and 835s flow. And the first one is all about balancing. The 835 has rules about the balancing. The services, every service line must balance to a claim and what's reported at the claim level. So you have 5 lines of service, $100 each, you know, payment for each, and that all equates to a claim level payment. And then another tier, the second tier, is to take all of your claim level payments, and that is supposed to equal your payment amount, but then there's always potentially those fun things called provider level adjustments. They could either add money or take money away from the claim payment. If something goes wrong in the creation of the 835 that affects the balancing rules, then the check amount could be wrong, Probably not. That tends to probably not be the place it goes wrong. But is it the detail of the 835, each of the individual claims? Is it a provider level adjustment that wasn't reported correctly? And it's very difficult to determine where that one piece of information goes wrong. If a file doesn't balance, the provider can't trust it, obviously, and so they back off. Potentially, they decide not to get the 835s. They stay with the paper EOBs. They manually post, and it's because of this sort of trust factor. They can't determine where the files are wrong. So without that level of, first of all, understanding, being even able to determine where it's wrong, or that trust to know that it's right, that's one of the reasons that a provider would choose not to get an 835. A lot of providers I've talked to, in my experience, have said that, well, if I can't get the 835, I can't get an EFT, because they feel that the two go hand in hand. Next slide, please. So this is kind of stating a little bit about what I just talked about, some of the common reasons that a transaction can be out of balance. There's missing dollars, and that was a claim, a service, so something is missing. Adjustments, that's the other piece that can go terribly wrong. Why is a payer, through their adjudication, not paying something that was sent as a charge? And without reporting all of the correct reasons, the dollars associated with it, it could give misinformation or clearly a lack of information. Also, those provider level adjustments, adding money or taking money away. For those that have access to the 835, the actual implementation guide, I'll mention that we call it a TR3. That's a technical report 3. Within the X12 world, that's just another name for an implementation guide. But there is a front matter section, 1.10.2.1, all about that balancing and the rules. So if you need to explore that further, I'd suggest taking that section and trying to study it. Next slide, please. Okay, so let's talk about a couple more issues that would prevent the provider-payer relationships from moving forward to having a full 835 and EFT. What is the payment? The payment is an EFT or a check. So we've talked about, we've talked a little bit about EFT. It's an electronic funds transfer. The money moves through the banking industry. There is no paper check. The date on the 835 says here's the day the money will be available to you. The CCD Plus transaction has that date in it, and the way it moves through the industry, through the banking part of the industry, make sure the money is available in time. They really are the two ways of getting a payment. There is today no way to create and process a HIPAA-compliant 835 transaction with a card payment. And that means there is no way to let the money move and get an 835 in effect. So again, a very large barrier to the industry being able to make this work cleanly. The future, I will mention that in the future next version of the TR3, there has been some changes that will be implemented that will allow a card, a virtual card, to be reported as a valid form of payment. But again, that is a future guide. We are just in the very beginning stages of getting that guide, to a place where we could propose a date and get it out to the industry. So, a couple years in the future still. All right. I will mention that the CAQH Core Rule 370 is the rule that addresses this 835 and EFT. Second, the timing of the 835. This is Rule 370 also. The timing is critical. I think every provider that could be on this call understands that It's critical to have your money posted to your AR account off of your 835, or if you're still manually posting. At the same time, you have your money in the bank so that it matches with your GL. It's just very critical. If it's off by a day, a week, a month, I mean months, it's just an impossibility to be able to reconcile. Thirdly, understanding why 835s were adjusted. So I've heard many times, oh, the 835 is a bad transaction. Oh, the 835, I can't deal with it. And I will tell you that the 835, since it's near and dear to my heart, is actually a very good transaction. The problem is the way the data is reported in the 835 transaction sometimes. And the 835 allows for a large amount of data to be reported back that reflects the adjudication that took place at a health plan site. But sometimes what goes wrong is the reporting of the adjustments. It's not maybe possibly the wrong reason codes telling you what happened, the dollar amounts, you know, sort of that real detail level. Maybe remark codes are missing that give that extra level of information. So it's very critical that reason codes are used. They're not proprietary anymore. They have to be the claim adjustment reason code group claim adjustment reason code group. Oh my goodness, group code list. And I just want to take a second to talk about that also. I mentioned that I am a voting member there. So there is a committee, the codes committee. This is a little bit of, if you remember in the old days, your lesson about how a bill becomes a law. Well, this would be how a request can become a CARC code. There is an online tool to submit for a change in a code, a new code, revise a code, delete a code, whatever is necessary. It's posted to a conference. The codes committee meets 3 times a year. It happens to be in line with the X12 standing meeting, but note that this committee is not part of the X12 organization. At that meeting, there is every code request is reviewed, it's voted upon and approved. Sometimes what's originally requested may not necessarily be what is finally passed, but we try to meet the needs of that request. We like to recommend that if you have a request or something's not working and you have a suggestion for a change, to reach out to the members of that committee maybe ahead of time and get a chance to talk through your request. We often invite people to our Work Group 3 meetings so that we can talk through the issue. A lot of times with all the membership we have, we're able to come up with some great suggestions for people. And it might mean a new code, or it might mean a change, or it just also might mean that here's a way to accommodate your situation with existing codes. Next, please. Another potential reason that the 835 cannot be used is due to the structure. The 835 structure, as every single transaction within the X12 environment, every segment, every element, every piece of data has a rule written on how it's to be used, how it's to be populated, when certain data should exist and when should it not. If something, again, goes awry in that place, if a health plan or payer is possibly not following all the rules, then it falls apart. So know that the rules must be followed. There are no exceptions to any rule that is found in the implementation guides. And that applies to every transaction, not just the 835. So just wanted to make that note. Next slide, please. This is a quick picture of an envelope. Again, I'm trying not to be too technical, but think about a holiday package. You're sending, your family lives across the country, there's a couple kids, their parents, and you're sending a large group of presents in a box. So think about this thing called the interchange, the outermost enveloping, as the big box that you put all of your presents in, that gets a stamp on it, that has the address, where is it coming from, where is it going to. This is how the 835 is also formatted. The group is the next, and there is a box missing. Could you try to hit to the next slide and see if it comes up? Ah, there it is. And then actually go one more time, please. Okay, so I wanted to do this all in one group. So the next innermost group, consider that the box that goes to the first child. In that box, you may have put 2 or 3 small toys in it, but that one box of that present goes to child 1. There could be many of these groups within that large box because of the way you send it to the family. And then the innermost loop here in the 835, consider that each individual little toy that is sent to that child, that individual gift. Okay. There is also within the 835, and this is not a session on how to take the 835 apart, but there are 3 sections to the 835, balancing, remembering that all of the claim payments in each of these transactions, the ST to SE, that represents an 835 transaction. That represents a payment deposited to your bank account. So at any one of these large interchanges, you could have many payments for that day, but each one will have its associated trace number, its associated payment amount, and payment date. And that information is in the CCD Plus, as I mentioned. Next slide, please. This is pretty much a little bit of that same information. One transaction contains one payment, so that ST to SE loop, a single payment to a single transaction. You cannot have a group of claims, 100 claims I'm processing today. If you split that up and want to make multiple payments out of it, then it must be reflected that way in the transaction, and it must have multiple ST to SE loops which represent that transaction. That is one of the problems we have seen time and time again, is the way the money is split up. All right, so a little more information here, a little bit more technical. Okay, next slide, please. And lastly, I'd like to mention the responsibility of trading partners. Next slide, please. All covered entities must comply with all HIPAA and ACA mandated rules. This is this is how it's written in the final rules, the HIPAA guide, the HIPAA mandates as we know it. Now remember, I'm talking as an X12. I'm making these points, and this is not legal, but these are facts that are pretty much across the industry. An entity that has a contract or business associate agreement with another covered entity must comply with all HIPAA and ACA mandated rules. This means that a health plan is a covered entity. They have a business associate agreement with a TPA. Then that means that TPA must also be following all of the rules as they're written under the HIPAA guide, the HIPAA mandates. And that compliance covers not only the HIPAA transactions, 837, 835, and EFT, but it also applies to the core operating rules and the EFT operating rules. Next slide, please. I'd like to make one note within X12. We do have a way for folks to come and ask for an interpretation. It's the RFI portal. The portal provides access to information related to the meaning, use, and interpretation of ASC X12 standards. So if there's a question about a file, a transaction that you might be receiving as a provider, and you're not sure it's right, or as a health plan, you could use a little bit of help trying to understand what data to populate in a certain situation, that question can be posed to this RFI portal, and the work groups associated with that transaction help create the response. It goes through, a larger X12 audience to make sure that it's appropriate as a response, and then it's ultimately sent back to the requester. I think we're up over, I don't even know what the current number is, well over 1,000 questions have been posed already. And then the other thing to just mention, well within compliance, is that really the enforcement of the 835 transaction lies within the actual 5010 TR3. As I mentioned earlier, it's the rules around every segment and element that is what makes up compliance. And the next slide, please. And this is just a slide that offers some resources if you're interested a little bit more about X12.org, if you need to purchase the guides, if you're interested in the different code lists, the CARCs, RARCs, claim status, they're all housed on the same website. And then this is a repeat of the RFI portal. You can just go out there now and look and put in a keyword search, and it would come back and tell you what possible questions have already been answered, you know, if you have a specific question. And with that, I would like to turn it back to Jessica.
Thank you so much, Pat. And now it's my pleasure to introduce Priscilla Holland, who's currently the Senior Director of Healthcare and Industry Verticals for NACHA. As Senior Director, Priscilla leads NACHA's Healthcare Payments Program and works on other payment and remittance information and standards projects. Priscilla has more than 25 years of experience in cash management, project management, and product development, and we're thrilled to have her here today as a presenter. Priscilla?
Thanks, Jessica. If you go to the next slide, please. This slide just recaps what Jessica had said earlier about NACHA. We are actually the private sector rulemaking body organization for the ACH network. We administer the rules. We actually enforce our rules through the financial institutions, and we are the standards organization for the healthcare EFT standard. So going on to the next slide, please. One of the things that I wanted to point out early on is the value proposition to providers for the automation of the EFT and ERA. I've found in the probably 100 or so of these webinars that I've done that pointing out the value proposition early gets people's attention a little bit faster. And so looking at the 2014 CAQH report, they have adjusted their numbers, and they are now estimating that a provider can save an estimated $3.04 per payment received by EFT via ACH over check payments. And I do want to clarify something. EFT is electronic funds transfer. That can stand for any type of electronic payment. EFT is an umbrella term. ACH is a specific payment system in the U.S. and multiple countries around the world. But for what I'm talking about today, if I say EFT, what I'm talking about is EFT via ACH. So a provider looking at this can save an estimated $3.04 per payment moving from check to ACH. But if they combine that with EFT and ERA, what we're seeing is an estimated $7.21 per payment. And if you look at a provider organization that gets 100 payments a week, multiplying that times 52 weeks in a year, you're looking at a savings of over $30,000. Some of the other things we've found is in the reducing of administrative work and days in accounts receivable. NACHA has done a number of case studies. I'm going to give you a link to that in just a few minutes. But in one of the case studies, which is a mid-sized provider organization, they were able to actually reduce the number of days in accounts receivable from 25 to 13 days by moving from check to ACH and EOB to ERA. And that organization is running at about 95% of all of their payments and remittance information coming to them electronically. We've also got another case study, a hospital that was able to reduce their receivables cost by 70% moving from check and EOB to EFT and ERA. And then through auto reconciliation, which is one of the huge benefits of the EFT and ERA, what the hospital case study shows is that they're able to post 76% of their transactions are able to match the EFT to the ERA and post them on the day it's received, and by day 2 they're up to 98% of the transactions. All of this adds up to a provider being able to receive their payments faster, able to post them with fewer errors, and actually allows them to issue a patient bill or doing secondary billing much faster than doing it through a paper check and an EOB. So going to the next slide. Next slide. There you go. Next slide. This slide actually just gives you a link to the case studies. So if you're interested in more information on these, and what we did was a micro practice, a single doctor practice, a mid-sized practice, and then a large hospital group. So if we'll go on to the next slide, what we want to talk about is some of the common issues that we are seeing in the industry with the healthcare EFT standard. Those are four primary issues. One, health plans are still not offering to deliver the healthcare EFT standard for claim payments if it's requested by the provider. Another one is that we've had health plans that say, oh, well, I use a business associate or a TPA, and therefore they don't have to be HIPAA compliant, or they're not HIPAA compliant, and therefore we can't offer it. We have issues with incorrectly formatted TRN reassociation trace numbers that Pat talked about a few minutes ago that are carried in the ACH addenda record. And then in the ACH addenda record, ACH record, we're having issues with incorrect information in the company name field. And so I'm going to go through each of these and talk about the issue and what should be happening with the industry. So if we'll go to the next slide. The ACA mandated the development or the identification of a HIPAA standard transaction for claim payments. It also mandated the development of operating rules, as Bob talked about earlier. And I will tell you that in all of my slides I cite the specific legal language as to where to find this, because I have had a number of organizations, when I tell them something, ask me, where does it say this? So that's what this citation is. The healthcare EFT standard was identified as the NACHA CCD plus an addenda, and it was effective January 1st of 2014. That means that as of January 1st of 2014, almost 2 years ago, all health plans or their business associates had to be able to deliver the healthcare EFT standard if it was requested. This is very, very different from the certification process that has been discussed. The healthcare EFT standard was effective January 1st of 2014. That says it is the NACHA CCD, which is NACHA's business-to-business transaction, and it must carry the TRN reassociation trace number as defined in the ASC X12 835 version 5010 TR3 report, which is, as Pat indicated, is the implementation guide. Now that TRN must match the TRN that's carried in the associated ERA, and those allow the provider to be able to tie the two of those together and then automate their posting process. Again, all health plans must deliver it if it's requested. Now, I will say that the regulation states that the NACHA CCD plus addenda is the healthcare EFT standard. It also says that other EFT options can be utilized, as in cards or wire transfers, but they're not the healthcare EFT standard. So from a health plan perspective, if a provider requests the healthcare EFT standard, you must deliver the ACH payment to them. And if they request that healthcare EFT standard and sign up for it, you can't then change them to a virtual card transaction. They have to get their payment via ACH. Going to the next slide, please. This is the citation that says that if an entity requests the health plan to conduct a transaction, it has to be done in the standard, and the health plan may not delay or reject the transaction or adversely affect other entities or the transaction if it they want the standard transaction. It means you cannot disincent a provider from receiving the healthcare EFT standard transaction. Going to the next slide, this is the citation within HIPAA that states that a business associate must comply with the HIPAA rules if they have a third party must comply with the HIPAA rules if they have a business associate agreement with a covered entity. Now going on to the next slide, one of the things that NACHA did when the CMS or HHS identified the CCD as the healthcare EFT standard was incorporate that standard into the NACHA operating rules. So we have identified all of the parts of the healthcare EFT standard. We're able to actually track these transactions flowing through the ACH network so we can count them. But the one thing that we have done is incorporated the formatting for the TRN reassociation trace number. This allows our financial institutions to actually edit on that, and if it is not formatted correctly, the item can be rejected and returned to the originator, or the receiving financial institution, the provider's bank, can actually file with NACHA for a NACHA rules violation. So let's go to the next slide. This recaps the TRN reassociation trace number, the fact that it is incorporated into the NACHA operating rules. It does allow banks to review the TRN for compliance and return the entry if it's not formatted correctly. And as NACHA is the rulemaking organization, we are also the enforcement organization. So there is a process through which NACHA can enforce the formatting for the TRN through our financial institutions and work with the originator's bank to get that formatted correctly. Going on to the next slide, one of the things that we have, I've had a number of issues with, is that I get calls from providers and their banks have given them my telephone number, and they call me and say, I've got an ACH payment and I don't know who it's from. Can you tell me who sent this? The NACHA operating rules require that the company name field in the ACH record, if this is for claims payment, must contain the name of the health plan originating the payment, or where an organization is self-insured, or the name of the third-party organization, the third-party administrator must be included in that, so that it is recognized by the healthcare provider, and it's the organization to which the healthcare claim or healthcare provider submitted its claims. So the health plan's vendor should not be included in the name field, and if you're using initials, it has to be something that is recognized by the provider. So you can't abbreviate a name so that nobody recognizes who's sending it. The challenge is the providers don't know who's paid them. They may not be getting an ERA, so they can't use the TRN to match that to an ERA, or they didn't receive the ERA. And it is very challenging for providers that are not able to identify who the party is that's actually sending them this information. So let's go to the next slide. And NACHA's system of fines is our enforcement mechanism, and it provides a means for financial institutions to report and resolve alleged violations to the NACHA operating rules. This is, when it says rules, this is not the core rules, this is not federal regulations, these are the NACHA operating rules. And it allows NACHA to work with the financial institutions to resolve the issues, to get the formatting corrected, and if there is a problem and someone will not respond to this, there are fines that will be levied between financial institutions and ultimately sent back to the originator of those transactions. So we do have an enforcement mechanism, but the primary focus of this is compliance, not fines. And then going on to my last slide is a listing of some of the NACHA resources. We do have a healthcare EFT standard implementation guide that can be purchased. We also have an ACH primer for healthcare payments that is a free PDF that can be downloaded. But with that, I will turn it back to Jessica.
Thank you so much, Priscilla. We'll continue today's program with a presentation from my colleague, CAQH Core Senior Manager, Robert Bowman. Bob?
Great, thank you, Jessica. And hopefully, as we've seen, heard from both Pat and Priscilla, there are definitely some challenges with implementing both of the transactions. And we see that both on the health plan side and the provider side, as well as all of the connections in between. So what we'd like to do is just walk through a couple of the other rules that we have available and see what kind of solutions are in the marketplace, what kind of solutions that providers and health plans can use and have, and resources that are available. And one that we did mention already a few times, both with Priscilla and with Pat Witek, is that on the next slide is the reassociation rule. Again, the problem that providers have is that if the payments do not come close in time to each other with the remittance advice, or there's incorrect information on either the remittance advice or the payment, the EFT, then the provider cannot reassociate the two transactions together. Because remember, they do come separately from separate entities to the provider. So the reassociation rule, the key impact is to help coordinate between the healthcare and financial services industry to make sure that they're in sync, that the data is available for the provider. It also provides assurance that the trace numbers that are really, really key to that reassociation are correct, are not missing, and are available for the provider to use. Because that is going to be the key that they use to combine these two transactions together. Again, as even Priscilla mentioned in some of the case studies that NACHA has completed, it really has seen significant reductions in open AR that are in the provider's books. So if you can reduce your AR days, the cost in processing your remittances, your payments, as well as posting almost 98% or greater of your payments within 2 days, it really reduces the burden on the providers. Again, so it really helps the providers to more quickly address denials and appeals and rebilling if necessary, as well as going on through secondary payment process or secondary payments, as well as patient billing. So we've seen significant impacts in the industry when providers do implement both the remittance advice and the EFT. And on the next slide, you'll see, again, the components of the rule itself. There's some other impacts that are important. There are very specific information that is to be made available to the provider when they enroll for EFT and ERA, so that they know that they need to reach out to their bank to request the information, just as Priscilla mentioned. There's also specific elapsed time requirements in receiving the EFT and the ERA. So there's a 6-day window, 3 days before, 3 days after, for the EFT and the 835. And again, health plans have to have 90% of their transactions within that 6-day window. There are also requirements for health plans to ensure that providers have directions on how to resolve later missing EFTs or ERAs. What does a provider do if they don't have one or the other within that window? How can they obtain it? Who can they reach out to? So there's also directions requiring health plans to support that type of information and analysis that providers require. On the next slide, continuing some of the information that Pat shared with us, the lack of uniformity for CAQH and RARCs and the enrollment for the transactions for both the ACH and the EFT are also going to be very important for providers. So on the next slide, you'll see that with the uniform use of the CAQH and RARCs, and those are the claim adjustment reason codes and the remittance advice remark codes, those two codes help the provider understand how the health plan adjudicated the claim. It's information to the provider, again, to help them understand exactly why a particular line or claim was denied or adjusted. And with the potential of every plan mapping those codes differently, providers had to go through usually a very manual process in understanding exactly what this health plan meant with this code combination and what that health plan meant with a different code combination. even though it's probably the exact same thing. So the rules address that process with 4 distinct business scenarios to help address the 80-20 rule, the problems the providers reported having problems in understanding what health plans were doing. And in the next slide, you'll see some of those key impacts that were mitigated was unnecessary manual provider follow-up to the health plan. They didn't have to call or go to the health plan's website to understand the reason for an adjustment. Bad adjustments and bad coding results also in bad electronic secondary billing. So we're also seeing those types of billing, secondary bills, being cleaned up because there's now these 4 common business scenarios that supports a streamlined code set. Other issues that are mitigated include the inappropriate write-offs of billable charges, as well as incorrect billing for patients for copayments and deductibles, as well as posting delays. Again, understanding the codes, allowing every health plan supporting the exact same code combination for the exact same type of business scenario for that adjustment allows providers to more uniformly process those payments, even if they have to drop those to a manual process. And on the next slide, moving into our EFT and ERA enrollment data rules, the problems addressed here are that many health plans have their own unique process for requesting data and different data sets from providers. So every time a provider wanted to enroll, there's a different types of data. There's a different process. Some may be paper, some may be electronic. The rules address those types of problems. And on the next slide, you'll see that the key impacts of the rules were to simplify the process for providers, make it all electronic, make it as one single data set, so all the data that is required to enroll for either transaction is now uniform across payers. It does address situations when providers outsource financial functions. So if you have a billing agent, you can still enroll, as well as if you're a micro provider, a single provider with one office manager, or a provider that's in a large hospital setting with multiple surgery centers. The data set accommodates all types of providers in whatever type of environment you're in. It also incorporates lessons learned because it does allow for a maintenance process that goes on annually. So if there are reasons to adjust the data set or the process, the industry can weigh in and it can support the changing business needs. On the next slide, there is a tool that's available to the industry, the CAQH Enroll Hub tool. This is a tool where providers can actually use a web portal, key in their information once and one time only, and that information has been distributed to currently nearly 20 health plans across the country, both national plans as well as regional plans, to allow the provider to enroll for EFT and ERA. So it's a one-stop shop for providers to helping them to enroll for both of the transactions. So it's a great resource, and there's more information available for this on this resource on our website. Moving on to our next slide, we do have some letters that are available for providers to ensure that you can enroll for the EFT and the ERA with your health plan. We have a sample letter that could be downloaded, and it helps the provider have the discussion that they need with the health plan to ensure that they can enroll for the transactions. It has all of the talking points that a health plan will need to address, as well as the provider, to ensure that the enrollment can go smoothly. So those letters are also available for free on our website. With that, I'll hand the call over to Drew for our last polling question. Drew?
Great. Thank you very much, Bob. And this brings us to our third and final polling question of the webinar. And I will read it and then launch the poll for everyone to respond. So this poll question says, which of the following would you consider to be the biggest challenge to your organization's implementation of the CAQH Core EFT ERA operating rules? I will launch the poll, and we will pause for everyone to respond. We'll pause for 10 more seconds. Take about 3 more seconds. Okay, I will close the poll and share the results. And the largest percentage, 33%, said overcoming resource constraints, and this could be time, staff, or external expertise. And then the second largest percentage, 24% said this has have not encountered any challenges or not applicable. And for those of you who did identify issues, please feel free, of course, to always reach out to us. We will continue our education sessions to help identify some of these hurdles and help you overcome them. So I hope this webinar you found helpful. And now I will turn it over to Jessica Porras.
Thank you, Drew. And so it looks like we're out of time for today. For those of you who did submit questions during registration, we'll contact you directly and respond to your question. Here's a slide with a couple of takeaways from today's session. Also, please know that in 24 hours, a recording of the session will be available. And more importantly, thank you so much for your time, and we look forward to you joining one of our future webinars. Have a good afternoon.